bunch of stocks are in focus, and the one that we're looking at right now is Yatra. The reason why we're looking at it is it's one of the only 3 IPOs that have listed at a discount to their issue price in this year, and that's the kind of market that it has been. The street was anticipating a subdued listing already, largely because, at an era where you see IPOs getting subscribed 10, 20, 30, 40, some even 100 times, this one was subscribed by just around 1.6 times. The HNI subscription was less than 1 time itself, just 0.42 times, and the QIBs subscribed around 2 times. So the overall subscription was close to around 1.6 times. It's the 3rd largest online travel company in India, the largest corporate travel services provider. But if you compare their operating revenue to other listed peers, Make My Trip does close to around 4,700 odd crores, Ease My Trip is 450 crores, and Yatra is 380 crores. So maybe with Ease My Trip's listing and this one right now, there could perhaps be a reason for no scarcity premium. But all of that and more, we have the company joining us right now, Dhruv Shringi, who's the CEO of Yatra Online, joining in to discuss the company's future plans. Dhruv, thank you so much for joining in. We were just talking about the peer comparison. Just wanted to understand, what is your share in terms of the market right now? But more importantly, in terms of incremental bookings, how does your share compare with the likes of Ease My Trip and Make My Trip?
Good morning, and thank you for having me on your show. I'm firstly very happy to be here. It's a momentous occasion for the company. We've got a strong business model, and we are very confident that over the years, the business will continue to compound. In terms of market share, as you mentioned in your commentary as well, we are the largest player on the corporate travel side of things. And we've got about 800 plus large marquee corporate customers that we service. And this has been growing at a very healthy rate. If you were to look at, pre-COVID, we were growing at almost 2x of the market rate. So we expect future growth to continue to be strong. And in terms of market, we expect the market to grow at, between the 10 to 12% mark. And with us guys growing significantly faster than that.
Okay. Hi, Dhruv. Good morning. And Nigel on this side. Congratulations on a listing. Well, it's a little bit tepid, but that's a feat in itself to come ahead and list on the bourses, and we'll be interacting for the next few years now. Dhruv, we missed the number though. What is your market share? Could you tell us what could it be? I mean, Ease My Trip, I think they talk about their market share being around 11%. So since you're listed as well, we'd like to know what is your number?
Sure. So if you look at the overall market, the market is made up of 2 components. One is the business travel side of things, where there are approximately about 13,000 large corporate customers which make up the market. We have about 800 of the largest amongst them with us. In fact, just to give you a stat, 1 out of every 4 of the top 100 entities listed on the BSE works with us. So in terms of market share, that will translate close to about a market share of about 6% in terms of customers. But if I was to look at that on a volume basis, because we are serving the top end of the market, it would translate into closer to about 9% of the overall market.
All right. So 9% is what your overall market is in terms of value. Just wanted to understand, you said that the market is expected to grow around 10 to 12% and you will grow much faster than the market. How do you define much faster? Is it 20%? Is it 25%? And in the first half of this fiscal FY24 so far, what have the volume bookings been in terms of on a gross basis?
Sure. So if you look at, and rather than giving forward projections right now on your channel, let me point you to historical data, right? So if I was to look at a 5-year CAGR pre-COVID, you would see that we were growing at about 24%, with the market growing upwards of about 10%. So from that indication, you would see that we've been growing at almost 2x of the market in the pre-COVID times. Obviously, COVID was a disruptive force for our industry. Last year's comparisons obviously look really healthy because it's coming from a low base, so you'll see growth being in the 90 to 100% range. But going forward, as I said, you can look at the past performance as an indicator of future growth.
All right. So 20-24% is between 20 to 25% is what you've been growing in the past, and say we're going post-COVID, that's the range that you would like to at least aspirationally maintain as well, right?
Yes. Yeah.
All right.
Okay. All right. Dhruv, what about, you've kept aside close to under 150 crores for acquisitions. What do you have on your radar in terms of acquisitions, and by how soon can we hear about it?
So on the acquisition front, we've kept some firepower aside to do some M&A on the corporate travel side especially. We've done such acquisitions in the past that we've successfully integrated onto our platform, and we would expect to look at doing something similar in the near term as well. We are also looking at other ancillary services that can bolt onto our platform and be sold to our large corporate customer base. These are things which are work in progress. Acquisitions, as you're all familiar, do take time. So I can't really define a concrete timeline something, but all I would say is please keep a close eye on us and you'll see exciting stuff happening in the near future.
All right, we will be watching out for the exciting stuff that you promise. Just wanted to understand a couple of things, about your business, because as customers, we, look at flight schedules, we look at, the ticket prices all over across websites, and invariably end up choosing either the flight which is most convenient or the price which is the cheapest among everyone else. So amidst this competition, just wanted to understand what exactly is Yatra's value proposition. You have been growing faster than the market. What is it that you're doing for growing faster than the market? And what new areas of revenue are you looking to seed?
Sure. So if you look at our business, our business is made up of two parts. One is the consumer part, which is what you are defining right now. The other is the B2B part, right? So pre-COVID, about half our bookings came from B2B, where we service some of the largest corporates in the country. We've got a technology solution that tightly integrates into these corporate customers. It'll connect into the ERP systems, into the HRMS, will take care of all their spend levels, look at their approval process mechanisms, right? And then on the basis of that, the technology enables the employees to book what they are eligible for. We'll do the accounting seamlessly. We'll do the, pushing into the expense management seamlessly. So that's a concrete solution that we provide to our large corporate customers, and that's a very sticky proposition. So unlike the B2C side that you define, where there is a high amount of price competition, like you rightly pointed out, on the corporate side, it's more of a platform play. Large organizations look at the strength of the solution that we offer, the kind of comprehensive service that we are offering in terms of products, and on the basis of that, then they decide and enter into a long-term arrangement. So that's what we focus on. That's a more profitable part of the business for us, and it's been a really high growth area for us in the pre-COVID era. And we've all seen how strongly corporate travel has recovered. So we have strong aspirations in this segment going forward as well. In terms of other products and services, so while typically flights would be the entry point, this is, given it's a platform, you see customers adopting hotels, car rental, foreign exchange, visa services. The whole gamut of travel and travel-related products comes in as a single window for our large corporate customers.
Okay, all right, Dhruv, and B2C, I think, will be around 55%, right?
That's right, yeah.
And give us the margin difference between both the segments, B2B and B2C.
So in terms of margin profile, if you look at the blended averages, we are looking at about 11% kind of blended operating margin at the EBITDA level. And if you were to look at this from a individual business perspective, the margins typically on the corporate side will be around 2.5 times higher than what you would see on the B2C side. B2C provides greater and faster scale, but has a competitive dynamic which is quite different. Corporate, on the other hand, tends to be a very sticky, very reliable, and very predictable kind of business.
All right, so that's interesting. 2.5 times margin is what you enjoy in the corporate business as against the consumer business. It would be interesting to know, the moat around these corporate agreements that you have as well. But that's a conversation for another time. Due to paucity of time, just a couple of things before we let you go. Dhruv, if you could give us a sense of what your ideal revenue mix would be between airline, hotels, and the other services that you offer, and your ideal margins going forward as well. Because I remember the last time you joined us, you did see significant upside for margins here. If you could define what significant means.
Sure. So if I look at from an aspirational point of view over the next few years, we would target about 60% of our revenue coming from air, about 30-35% coming from hotels and packages, and the remaining coming from other services. In terms of margins, while we are currently at about 11% kind of margins at the adjusted EBITDA level, we would expect the adjusted EBITDA margins to get closer to the high teens, if not get to the 20% threshold over the next let's say 3 to 5 year horizon.
All right. Thank you so much for joining in, Dhruv, and giving us the details. It is a subdued listing, but if you go ahead and achieve the guidance that you've given to the street, grow faster than the industry, gain market share, and continue your moat, perhaps the street will recognize that as well. Look forward to having a lot more conversations with you in the future. All right, that was the management of Yatra Online Limited. Opened with a 9% discount to its issue price, has recovered from there, sitting with a cut of about 5% versus its issue price. We'll take a short break.